talk about earnings, and come Thursday, we'll already be officially kickstarting earnings with TCS coming out with its numbers post-market as. Kunal, what's the revisit or rather read-through now on IT as a pack?
So I think it depends on how the markets would probably take the reaction post results, because right now there is a phase of lull for many of these IT stocks. Within a range, it's possible that the IT stocks may come back into breakout modes or potential breakout modes or retest of the resistances. But till the time we don't see a breakout of prices for many of the larger cap names, I think it could just be about more of a consolidative move. For example, TCS, I think over the last 2 months or so, from the month of May, somewhere the stock has been struggling to break past about 3600 levels, and it's just been grinding into 150 200 point range, drifting very gradually lower, closing in towards the 50-day moving average, and just try to trade around those levels. Infosys is also very, very similar. The stock has been trading just around that 1600 to 1640 kind of a band over the very short term, over the last 3 to 4 weeks. So this indicates that we are looking at a point where the markets are getting positioned potentially of a breakout kind of a move. But I think it's always better to wait out for that confirmation, because generally we've seen that when volumes are not seen as a precursor move, the moves, they tend to fizzle out very, very quickly. So I think if we see post results volumes being on the higher side and the prices breaking out on the upside, that could be a very strong indication that we are looking at a major change of trend for the IT stock. So I think it's more of a wait and watch at current levels.
Okay, so wait and watch for earnings is the call coming from Kunal. But what exactly can we expect from IT earnings this time around? It's expected to be soft for Q1 for IT, but still better than Q4. And mid caps are also likely to outperform large caps. My colleague Pulkit, who tracks the sector closely, is joining us with what we can expect from IT companies for the quarter gone by.
With the result of TCS on 10th of July, IT earnings will start for Q1. So we are expecting the Q1 of FY26 is expected to be modest. If we talk about the mid-tier companies like Coforge, Persistent, LTI, Mindtree, they are likely to outperform. But if we talk about the tier 1 companies, TCS, Wipro, HCL Techs, they are under deal ramp downs, and we are not expecting very high growth for particularly tier 1 companies, especially the engineering and research and development division that will remain weak and risky. If we talk about the demand, BFSI demand will remain to be stable, and if we talk about retail, auto, communication and manufacturing, they will be a little bit weak as compared to the last quarter. For the key factors that are influencing, the first major factor is tariff uncertainty, as we don't have the proper decision on the tariffs. So this will be from that clients are prioritizing non-discretionary spends, and they are focusing more on cost optimization. For example, if we talk about the tier 1 company TCS, so as per ICICI Securities, the Q-on-Q growth for CC is around minus 3.4%. So if we talk about tier 2 companies, the Coforge, we are expecting somewhere around 5.5 to 6.5%. Key points to watch in management commentary would be deal pipeline, Gen AI adoption, vertical wise what strategy companies are focusing on, hiring trends and margin levers.
All right, thank you so much, Pulkit, for getting us all those details. So that was the expectation from the IT space overall. But Mr. Tandon, help us with your own sense on the IT sector as a whole. Because of late, the trend that we have been seeing is that the large cap companies, though they used to post decent set of earnings, but onto the stock price movement and the excitement from the investors, the major traction was within the mid and the small end. Do you believe that this trend is expected to continue this time around as well?
Well, overall, the earnings of the sector are not going to grow very, very high, right? I mean, you are, with the exception of Coforge, which is extremely bullish in terms of their management commentary, almost everything else is sub 5%. And that's the kind of growth that you are looking at on the bottom line, not on the top line. Top line year-on-year growth will be anywhere from 1 to 6 or 7%, let's say at the best. So I don't think it's a very exciting sector. More importantly, if you look at the numbers that are going to be recruited, I think that is a number that people are not focusing on. You are looking at a situation where at least the bulk of the basic code writing requirement is now being done in an automated format. And with that, therefore, you are looking at more either consulting opportunities or more upskilling kind of opportunities. What India is getting now is actually a bunch of people, which people are doing as cost takeout deals, which is not a great thing, because what they are doing is passing on their surplus people with an agreement that over the next 3 years you will hold on to them. And then, while that may show up as revenue growth right now, but over time, what are you going to do with them? Because if they're not required for coding, it isn't as if you have much use for them either. So unless and until there are greater product opportunities or IP creation opportunities in the IT sector, I would be a little wary of going in for the regular services company, which is why the large cap, while it is relatively cheaper in many cases compared to the mid cap, is not very exciting. You may want to look at specific specialist companies which are catering to either products or specific areas where they have greater IP creation possibilities, and look for them. The broad IT services sector, I don't think will do anything great.